Morning, Doc.
G'day, Lou. Yes, good to be here again. Good to have a chat with you about what's happened in our housing markets this week. And it has been, as usual, another interesting week. And we are starting to see maybe just some early signs that perhaps that Sydney and particularly Melbourne markets might have peaked. But we don't want to call this one too early. But it has been a strong result, particularly for Sydney this year so far. And Melbourne hasn't been too far behind as well. But maybe a little bit of buyer fatigue coming into the market after what's been a very strong winter, in a relative sense, because winter is typically a quieter period. But we did have a good market through winter, still building on that catch-up energy, Lou, and that's what's been driving the markets, I believe, is the fact that even though we've seen relatively strong growth this year, particularly in Sydney, we're still not back to the peak levels of March last year. So I think that's been a positive for buyers, that they've considered that there was sort of value in the market that they could purchase at prices that were lower than the peaks of early last year. But, of course, that's getting closer to those peaks now. So perhaps those value opportunities start to diminish. And, of course, there have been some constraints. We don't have to mention higher interest rates, although the higher interest rate environment seems to have left us for the time being, or the higher by rising interest rate environment has looked to have left us for the time being, which is good news for mortgage holders. But eventually these things catch up, higher prices, higher costs in terms of mortgages. But look, markets are still moving ahead positively. Perhaps with the exception of Melbourne, but we've still got some data to come through for this month before we can call that one. But the interesting thing is, and we don't want to give too much away for next week, is that we're seeing that Brisbane market really bounce back quite strongly, which is really interesting because it's only had a very short period of adjustment, and it looks like it's back in town again. Not that it's really been out of town, but... So we've got lots of interesting things to discuss today, but of course we have the latest economic data to look at. Last week we had the August labour market data. We've been a bit sort of up and down over recent months, and we've questioned the ABS regarding that in terms of or their data. That it looks a little volatile, and yet it's supposed to be seasonally adjusted. And we have said perhaps and the ABS has admitted this, perhaps there are some issues with their seasonal adjustment models coming out of the COVID lockdown period. But we sort of bucked that trend last month with another strong result following what was a pretty strong result in July. So let's and also speaking of economics, we've got the latest migration data as well, Lou, for the March quarter. And of course, that's a key driver of housing markets, particularly given we had the lockdown period. So we've gone from zero to hero in terms of opening those borders and having a flood of people coming in, obviously needing somewhere to live in what is, clearly an undersupplied market, as we saw last week with the latest rental data, seeing vacancy rates just collapse over August. But so shall we get started, Lou?
Absolutely.
Yes. Don't want to have too much of a give it all away.
No, I'm excited to hear what's happening.
Excellent. I'm always excited. So, of us, mate. That labour market, strong and steady. The August unemployment rate was steady at 3.7%, Lou. A very low number, of course. It sort of floats around. It's been floating around 3.5 to 3.7 really for most of this year. Which, of course, is still near record low unemployment rates. And we have to go, certainly record lows for the monthly survey. We have to go back to the early 1970s, Lou, to see unemployment rates this low. But, of course, then we used to do a survey based on quarterly data, not monthly data. So it was a different measurement process. And, of course, it was a different Australia then, Lou, of course, in the early 70s. Single income households, etc. So now, this is a very strong labour market, record lows really, all things considered. Just maintained that 3.7% from last month, but it would have gone down because when we look at the other numbers, they're very, very strong. The jobs were up again, up by 65,000 jobs created over the month. Very big result. We've really created a lot of jobs this year, Lou, overall. The unemployed numbers were down by 3,000, which as I said, we had slight variations to that over the previous month in July, where we had a slight fall in the number of jobs and a slight rise in the number of unemployed, but that bounced back quite significantly over August. The interesting thing was the participation rate, which measures the proportion of people who can work who are actually working. And that bounced back to a record high 67%. So we now have more people out of our workforce, potential workforce, who are working than we've ever had before. So, what that means is if we had have had the same participation rate as last month, our jobless rate would have actually fallen probably to below 3.5%. But we've dragged all these, so it really doesn't get any better than this. We've dragged all these extra people into the, out of the potential workforce into the workforce. We've also created a very significant number of jobs and also seen the number of unemployed fall. So, that's a very, very strong result, Lou, for the labour market over August. And really, we have to ask the question, clearly, what impact on the real economy, and that's jobs, have higher interest rates had? And they've had no perceptible impact at all, on the number of jobs, on the labour market itself, and the unemployment rate. And yet we've had now a number of pauses in the official rate. So the Reserve Bank is sort of saying, oh well, maybe this is the perfect position where we've got a strong economy, and to this point anyway, there has been some significant improvement in inflation. Now, I wouldn't be hanging on to that one for too long, but at the moment, it's a very, very good result. Strong labour market, very strong labour market, and some easing in the inflation rate. But we'll get that latest monthly inflation data out at the end of next week, Lou. So it'll be interesting to see if we continue to see improvements in inflation. But if we do, hey, this is a really good result. And only adds to consumer confidence going forward, because I think, it's very important that we have everybody in work who can work, and that offsets some of that those stressful mortgage stress environments that we've been, we and many others have been discussing recently. So there's the unemployment chart. It does show that flattening, really, that consistency at those record low levels of unemployment rate, and how well below it is recent history. Again, New South Wales, the leader in terms of the unemployment rate, just 3.3% unemployment rate in New South Wales. Again, that's a factor in the strong Sydney housing market. Interestingly enough, that even though I discussed briefly that the Brisbane market looks to be gathering another head of steam, the unemployment rate in in Queensland actually has started to tick up a bit. Now, 4.1% is nothing to get really worried about, but nonetheless, it's an interesting result. But really, across the board, it's only Queensland that has an unemployment rate in the 4s. Everybody else is in the 3s. And just starting, some of those states just starting to track a little higher, Queensland, South Australia and Western Australia, than where they were a year ago. But I think we're quibbling a little bit there. These are still very, very strong numbers, and the national number was certainly extremely positive going forward. Now, I also alluded, Lou, to the latest migration data that we got from the ABS. We know that migration has reversed in a flood following lockdowns. Once we opened our borders back up, everybody wants to come and live in Australia. Well, are we surprised? No, we're not. And they're heading in here in droves at the moment. So you can see that really big reversal there in terms of, firstly, lockdown, when we just collapsed, particularly this is net annual migration. So it's tracking migration over an annual period from quarter to quarter. So this is the latest data is measuring the March quarter this year versus the March quarter last year. But you can see how quickly the markets have rebounded, particularly New South Wales and Victoria, which of course are the big migration states in terms of international migration. They fell through the floor during lockdown because basically nobody came in. But you can see how quickly they've reversed now, big numbers over that March annual period, over the March quarter, with once again annual net migration, total net migration, with Victoria leading the charge, but New South Wales not too far behind. And just some easing. And the interesting thing is the gold chart there is Queensland. And you can see that even though Queensland fell away a little bit during COVID, it wasn't certainly anywhere near the levels of Victoria and New South Wales. And that's because a lot of what was lost out of Victoria and New South Wales was actually gained in Queensland because people decided, not staying here during lockdown, heading to the sunshine, and they moved to Queensland. So even though Queensland did have fewer, obviously, international migrants, they picked up a lot of interstate migrants through that lockdown period. Now, that, of course, is not happening to anywhere near the degree it did during lockdown. So that Queensland net migration has just eased off a little bit now that we're moving past that exodus from the southern states stage, but still quite high. You can see there that Queensland net migration is still quite high. And that's another factor, perhaps, that's driving that Brisbane housing market at the moment. So, again, where are we going to house all these migrants, Lou? That's the problem. And I think governments sort of realise that. It was interesting that the Victorian government have announced that they're going to put a cap on Airbnb vacancies now down there. They're saying that you're going to have a maximum number of days that you're allowed with your Airbnb property. And the other thing is they've also announcing some increased levies and charges on Airbnb properties. I think that, even though we know the Victorian budget needs some work to recover itself and they're looking to find extra income anywhere they can, I think that also here they're trying to get those temporary accommodation models such as Airbnb back into the permanent market to try to encourage those that have Airbnb maybe to take a full-time rental, permanent rental, through an agent or whatever. So interesting times there. And, of course, you can see those numbers for Victoria reversing in migration. So they know that they really do need, particularly the student migrants, to get a lot more properties available to rent, and maybe tapping into the Airbnb market is one of those strategies. So interesting times there. And we mentioned last week with the rental report that the big fall in vacancies over August reflected the start of the second part of the university year. And a lot of students, international students particularly, would have come in looking for to start the second part of the year. And of course, that meant that there was a big surge in demand for rental properties. So continuing on with our slide deck, there we go. When we look at overseas net migration, Lou, it's interesting that New South Wales is leading Victoria in overseas migration. This is net overseas migration. As I said, these numbers are pretty big because we're not seeing the outflow of international migration because we didn't have the inflow during lockdown. So it's mainly, the numbers are all about coming in rather than coming in, take away, coming out. But New South Wales is still leading the charge in terms of net overseas migration, annual migration. The reason it's not performing as well as Victoria in the total net migration that's overseas and interstate is because New South Wales is still, as it usually does, shedding people interstate. So that's dropping away its total position. But still good numbers there. New South Wales ahead of Victoria for net overseas migration. But as I said, we're getting migrants coming in, but we're not getting them coming out yet because of the lockdown scenario. So you can see there, interstate migration, Queensland's still top of the pops there. The people moving from state to state, net migration into Queensland still quite high. Still capturing a little bit of what happened early last year at the end of the lockdown sort of exodus, but nonetheless, maybe it's becoming more popular to live in Queensland, and we're still seeing, strong numbers of net migration coming into Queensland. And Victoria is now starting to sort of get back to normal. That sort of fleeing from lockdown environment has eased. They're still shedding, but once again, it does reflect a little bit of what was happening at the back end of lockdown a year ago in terms of migration. And New South Wales continues to be the underperformer, as it typically is in terms of interstate net migrations. That's interstate figures. We also mentioned migration again. It's the conundrum, Lou. Too many people, not enough houses. We're getting more people, but fewer houses. So that's going to mean higher prices and higher rents. And the only way we're going to fix it is by having either fewer people, that's not going to happen, or we're going to get more houses. And all the goodwill on earth is not going to get the sort of housing numbers that we need to fix this problem. So we're going to have to get used to high rents, in the longer term. And look, the one thing, and we discussed this again last week, is at least governments are starting to talk about giving investors, yes, hang on to your hat, incentives to get into the market. Finally, they've realised that the people or the group that they should have been encouraging were investors, not the fact that they'd been discouraging investors for a while now. So maybe the penny has dropped and they're going to start to encourage particularly small-scale investors to get into the rental market to try to really improve this terrible rental market that we have at the moment. So we also had the latest home loan data out, Lou, recently. And just before we, look at the data, it's interesting that the ABS have actually didn't produce any first home buyer loan data for the month, which was a little disappointing because that's an important, obviously, part of the data set. But they also said they're not sure when they're going to bring back the first home buyer data. And they also said that perhaps, we shouldn't be looking too carefully at what's been recently published for first home buyer lending. So again, it sort of adds to a few of the issues that the ABS perhaps have had post-COVID. I'm not so sure it's a COVID issue, but I think it's more about the data collection process, because they mentioned that they're having discussions with APRA. Of course, that means through the banks, about how they collect first home buyer data, because there's obviously some issues about its accuracy. But nonetheless, we can still look at the overall lending data, which was interesting. We've seen, not surprisingly, that, and this is a total owner-occupied lending or total lending over July. It was just down a touch by 1.2%. The lending tends to lag the market just a little bit, but you can see that lending has certainly trended upwards through the revival period this year in our housing markets. No surprise, but just a little bit volatile. Again, maybe reflecting some of those seasonal adjustment issues that we continue to mention. But I think it's important to say that we need to look at the sort of the underlying trend there, which is certainly higher when we're looking at the home loan data. But yeah, just down a little bit last month. This is total lending. And when we divide it into investors and owner-occupiers, we can see investors tracking the same rate as owner-occupiers, but not as volatile, the investor data there, which is the bar chart, still actually performing a little better than owner-occupiers in terms of the annual position. So still below where they were during the peak of a year ago, which we mentioned is the same story, or the peak of March last year, which is the same story when we look at house prices. But nonetheless, it's sort of validating that revival that we've had in the housing market, Lou, this year so far, with more lending going on. But, once again, let's take this with a grain of salt, the month-by-month figures, and look at those trends which are on the rise, even though there was a little bit of a fallback over the previous over July compared to June. This is refinancing, Lou. We had a lot of talk about what was going to happen. Remember the cliff, right? We were going to have the cliff this year where we had all those poor old people who took out loans at those very low fixed rates a couple of years ago, crazy low fixed rates. And what was going to happen when we had higher rates and they had to refinance this year? Oops, it was a cliff. It was going to cause chaos and, people would be bailing out of their mortgages and, all the doom and gloom that are we getting used to it? Well, let's hope the punters out there are getting used to the doom and gloom nonsense, because guess what? They got it wrong again, right? So no sign. Markets are rising. Prices are rising. Loans are rising. And we still have, even though it's flattened out a little bit, significant refinancing occurring here. So you can see, once again, the trend has certainly flattened off with refinancing, but certainly the official data in terms of arrears and defaults is very steady and at very low numbers. And, of course, the offset to all that is, firstly, we would have seen those mortgagees who took out the very low fixed rates would have saved money in the first instance with those low rates compared to, so that was the first saving they would have made, and that would have got into the bank account at one I guess stage. But and the other thing is, we've seen wages rising consistently at the highest levels in 10 years since those those low fixed rates were introduced. And of course, there's so much work around at the moment, plenty of work around at the moment. And we've started to see higher house prices as well. So that sort of adds to the balance sheet. And of course, no surprise, we've had no cliff, So I guess the chant will be, oh, yeah, but wait till next month. Okay, we'll wait till next month. And we'll just repeat this particular show. So that's the number of refinances that are occurring. And when we look at the proportion of refinancing to total lending there, just picked up a little bit lately, but you can see how that's fallen away this year, really on the trend. And again, that does reflect a little bit of that questionable data from the owner-occupier lending that we saw in the previous slides. But nonetheless, it's the refinancing share is flattening out as people are taking a higher proportion, or certainly the same proportion of variable rate loans compared to fixed rate loans. So sad, no sign of a cliff. Again, we'll have to work. It comes following. We've had the mortgage bomb. Remember the debt bomb that we were going to have. Right. And that even the media seems to have got a little bit tired of that dusty old headline of debt bomb. Whatever happened to that? I think the guy who was promoting that doesn't even live in Australia anymore. So good luck with that. Again, the data proved to be completely fallacious in terms of it predicting this so-called debt bomb, which we don't have any sign of in terms of the real data, which is those arrears and defaults. Yes, look, people are doing it tougher with higher interest rates. We know that. But on balance, we have, what's looking like at this stage anyway, the prospects of a soft landing with higher interest rates, with our economy still performing quite well. And certainly our housing markets are on the rise again. And it's, of some comfort to see those, the capital growth improving the balance sheets of households. So that's the latest home loan data. And as we always do, Lou, we'll finish off with the weekend auction markets. We've seen some interesting results over recent weekends, Lou. Just a sign that markets have just tapered off a bit, particularly Melbourne and Sydney. We had relatively steady results last weekend, but clearance rates are now, in Melbourne and Sydney particularly, tracking below their recent peaks in most capitals, Adelaide and as well, except for Brisbane, which, as we've mentioned before, seems to be picking up slightly. So, look, maybe it's those higher early spring listings. We've seen a lot of listings coming into the market. Maybe that's just testing buyer depth. There's more choices now for buyers with more properties coming into the market. And, of course, we're going to be very excited this weekend. I know you will be, Lou, because we've got our first Super Saturday of the spring selling season this weekend. Of course, it's the pre-grand final weekend, so agents tend to front-end load their listings to avoid a clash with the grand final, AFL grand final particularly. So we do get big numbers of auctions coming into the market this weekend, particularly in Melbourne, where we've just seen a little easing in results. But so that'll really test the markets. If they have been just easing because of higher listing numbers, they're really going to be tested this weekend because listing numbers will be significantly higher. But that doesn't necessarily mean that clearance rates will fall, because there's a lot of different properties coming into the market. So even though there might be more choices, they're not necessarily the choices that buyers are looking for. So a big weekend coming up in a market that's just started to look a little sideways over recent weeks. So these are last weekend's results. Big number of auctions in Sydney, Lou, 811 auctions. Clearance rate to just a little bit below where it was the weekend before, basically the same. But certainly Sydney's not tracking up near those 80% results that we've had over August and July. But still good results there, more or less, for sellers with that 72% clearance rate, particularly from big auction numbers, 811 auction numbers, which is the highest number of auctions that Sydney has conducted so far this year. Melbourne down a little bit from last weekend. Last weekend in Melbourne, the previous weekend, was also for Melbourne the highest number of auctions conducted over the year to date. So down a little bit, 858 auctions in Melbourne. But as I mentioned, Lou, there'll be big numbers coming in this weekend in the pre-AFL Grand Final Super Saturday. Melbourne clearance rates down a bit, 66.3%. They did move and work consistently around the 75%, Lou, about a month or so ago. So they've come back a little bit, that Melbourne market. So we need to keep an eye on Melbourne, and that will be certainly tested next weekend with big numbers. A good result in Brisbane, higher auction numbers, considerably higher auction numbers, and a good clearance rate there, even though we know that Brisbane rate tends to bounce around a little bit. But another sign that Brisbane market is picking up. Adelaide also been down a little bit over recent weekends. Maybe it's the distraction of AFL finals, who knows. But it's certainly moved below its 80 and 90% results it was getting a month ago, down into the 70s. Again, it'll have a big weekend for auction numbers, and Canberra reasonably steady, but also down a little bit on its peaks recently. So, look, some interesting results there, Lou. And when we look at the trend there, you can just see in Sydney, just topped off a little bit from its previous highs, but still producing good results there for most sellers. Melbourne certainly pulling backwards now a little bit, which is interesting. And when we get our prices data out, which we'll give a big preview to next weekend or next week in the show, it'll be interesting to see whether we're seeing a price result, which we usually do as we see changes in the trend for auction clearance rates. Brisbane had a lower result the first weekends in spring, so that bigger result at the weekend hasn't picked it up yet. But still, look, steady results there for Brisbane. And as I said, it's a smaller auction market in Brisbane, so it tends to be volatile. But early signs are showing some real pickup in that Brisbane market, and we'll see that price data next week to substantiate that. Adelaide down, as we've mentioned, also over recent weekends compared to what was a very strong August. And Canberra also down, but reasonably steady. So interesting results there, Lou, in our auction markets. Just the sign that trends are starting to consolidate a little bit lower than the peaks. We'll need to have that revealed over what is going to be a volatile couple of weekends with the Super Saturday and then a quieter weekend. And then we'll move into October, which tends to be, again, a better month for sellers, October, and then we move into more of a buyer's market as the year moves on. But certainly we can't quibble about what's been very strong results in our auction market so far this year, and still results to this point of time, you would say favouring sellers. If you're looking for those auction clearance rates, they are available every Saturday night, the headline rates on my LinkedIn channel, which is Doc Andrew Wilson. And on Sundays, we get the full national report released Sunday mornings, which includes the regional breakdowns for Sydney and Melbourne. So interesting to see those regional breakdowns, which areas in Sydney and Melbourne are performing the best in terms of auction markets. Also, as we finish off, Lou, we always mention the goodies that Infinity offer their clients. And in particular, we have the great little How Much Is My House Currently Worth app, which is driven by My Housing Market, which is a great little toolkit for prospective buyers and sellers, or those that are just interested to know what's happening in the market. And what that does is it gives us all the latest asking prices, asking rents for every suburb that has an asking price and an asking rent in Australia. So it covers everything. And it also gives you not just the median asking price, but it gives you the high price and the low price, and also the number of listings, whether they be rental listings or rents. So it gives you high rents, low rents, and median rent. So good, and that's in real time. That's uploaded and updated consistently or continually. So a great little toolkit there. And also, Lou, you can filter it for not just the suburb in the country, like the state and the suburb, but also you can filter it for whether it's a house or a unit or a townhouse. And also you can filter it for the number of bedrooms. You can do it for total bedrooms, or you can do it for one bedroom, 4-bedroom house, 1-bedroom unit, etc. So a handy little tool set. Now, if you want to get access to that little app, there is the QR code. Take a picture of that. You'll get a link to the app, but there is a password, and the password you have to get through Infinity. So get onto Infinity, and they'll discuss with you how to access that password to get that great little app, which is a good assistance. It gives you good assistance for real-time insights into Australia's housing markets on a suburb basis. So next week, we're going to have a look at those September house and unit prices. Very interesting, Lou. We're starting to see, we'll have some deep discussion on that, some maybe trends emerging from what's been a strong market this year so far. Have we reached our peak? Are we heading towards it, or is it just a piece of early spring consolidation? So latest weekend auction results will also be interesting because it will tell us what's happened over Super Saturday. So that's all from me today, Lou. Great to be a part of what's happening in the housing market. Again, those insights. And I look forward to another very interesting show next week when we get our end of the month data.
Fantastic. Very informative. And we'll be looking forward to Super Saturday too.
Yeah, okay. Let's hope it's super for all those sellers out there and for the buyers too, because it's great to buy a house, isn't it, mate?
Always. It always feels good when you buy your home.
That's right. Good on you, Lou. Keep well. Right. See you later.
You too. Bye-bye.